Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. China's central bank announced major stimulus measures to boost its economy, including rate cuts, increased bank liquidity, home buyer incentives, and plans for a stock stabilization fund. The CSI 300 index surged and the offshore yuan briefly strengthened below $7 for the first time since May 2023. There's lots to cover today, including Australia's central bank decision, US consumer confidence data, and Moody's upgrade of India's GDP forecast. Good morning, Pankaj. With China's aggressive stimulus and the positive market reaction, how might this impact global markets? Also, what's your take on the developments in the global markets?
Hey, thanks, Saraj. After a long time, I'm back on this podcast. Thank you for the opportunity. Uh, what I'm seeing is now central banks are driving the markets, whether it's US 50 basis rate cut or whether it's Chinese bazooka. Somehow the systems are not very ready to have a asset price correction. And what we have seen in China, it's unmatching. In a single announcement, they are talking about cutting reserve ratios, cash reserve ratios by 50 basis point. Uh, 7 days repo rate have been dropped by 0.2%, it's 20 basis point. 14 days repo has been dropped by 10 basis point. Interest rate on existing mortgages are likely to reduce by half percentage points. End of the year, they are also saying reserve ratios will be further reduced. Central bank is actually envisaging a stock stabilization fund, and that's awesome. What they're trying to say that you put up a collateral, take a liquidity from us to buy equities. Simple. We are available whenever there is a need. Central bank's message. Uh, they are also asking government to support through a fiscal measures. So this is the bazooka, and what happened after this bazooka? Uh, Chinese equities were up by almost 4.2, 4.3%. I can tell you gold was glittering, $40 higher. Silver was signing higher by 5%. And base metals were glowing by 3.4, 3 to 4%. And that's what we led into. In the evening, Indian evening time, there was a release of US consumer confidence index. And that fell to 98.7%, which was actually last time in August was 105.6. So there's a fall in this, and that led to overall kind of a weakness in dollar. We saw euro again approaching towards 1.12 and GBP almost touching 1.34. All these leading to a kind of a dollar index fall and dollar index approaching towards 100. That's basically a very big support below 99.50. We can assume that another 2 to 3% fall in a dollar index. Now coming to another rate decision by RBA, Australian Reserve Bank of Australia decision, they maintain their cash rate at 4.35%. Now, what happening in this is basically a major central bank which has not reduced the rates led into a rally of Audi, and that has moved to almost 1% higher at 0.6885, and it's likely to trend further higher by support of a commodity prices across all the commodities. Now let me look at and highlight it. Basically, US have cut rates, but there the other side we are getting a kind of a messages that food prices or agri prices are again likely to go up. There is a reported a drought in Brazil, and Brazil is the biggest supplier of not biggest, one of the biggest supplier of agri commodities, and that likely to lead, or already the food prices have started ticking up. So whether US rate cuts are addressing the economic concerns, or it basically dealing with the fiscal stress, and that will be discussed in coming weeks and months. And coming to India, dollar rupee, there was a support from RBI, which has again I think bought around it, protected on a dollar rupee not to go below 50, and it touched 47, 48 a few days back, but from there it has been consistently buying, and we closed at 68, 69. Today we are expecting a dollar rupee to open closer to 55, 56, and let's see how it build up around there. Indian equities continue to rally. Indian equities are touching all-time high, was just shy of a 26,000 Nifty index. Let's see whether it crosses today above that. The important data point for a Indian household assets, gold prices, which is almost touching now 75,000 per 10 gram, and that has, let me put in, that has doubled up in less than 4 years, and in last 4 years. The amazing rally happened in gold, and Indian consumers and Indian households are really happy. We are seeing the wealth effect of gold across the rural and urban market, likely to continue that way. Thank you. Thanks a lot. That's all from me today. So I also want to add one more thing. GDP, Moody has revised India's GDP growth from a 6.8 to 7.1% yesterday, and that's very important indicator.
Okay, thank you, Pankaj. And just quickly summarizing a few key points which you highlighted. Of course, the PBOC, what they are trying to do is pretty interesting with the stock stabilization fund. US consumer confidence data was lower yesterday, which resulted in a weak dollar. Australian Central Bank maintained rates, and that has resulted in a rally in Aussie, also supported by higher commodity prices. And gold, of course, in India touching 75,000, which has doubled in the last 4 years. So very interesting stats over there. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.